Hey, Bud. Hey, Kevin. How are you? Nice to catch up with you. I don't know when the last time we chatted. It was sometime in the summertime. You gave us a great presentation on how interest rates function, and I thought that we had some good feedback on it. And I wanted to see if we can do this on a more regular basis. And I think obviously with Trump tariffs coming potentially next week and some volatility from the Bank of Canada, it would be good to get you on. So happy New Year.
Yeah, happy New Year to you too.
How's it going over there? What's new in your life aside from the Leafs trouncing the Habs a couple of weeks ago?
It looked good for a while.
Seven straight goals. That was
You
never answered your text.
It looked good for one period, and then and it all fell apart.
You didn't answer my texts or my daughter's texts.
Yeah, I don't answer your texts on a regular basis, let alone when you're gloating over the Leafs.
That's true. So what's happening? Tell me.
Not much. I mean, it's been a fairly quiet start to the year, besides yesterday with the whole deep seek nonsense with the AI. But that was more of an equity thing. But it did sort of move bond markets a little bit in the morning. But
what did it? I posted yesterday about deep seek and AI being done much cheaper than some of these bloated, AI companies that are spending a gazillion dollars. But obviously the stock market took a hit. It's back a bit today. How did that affect the bond market?
In the early morning, it was most severe. The move in the equity markets was most severe, like around 5-6 in the morning, and the bond markets were up quite a bit. Oddly enough, the Fed funds market started to price in some type of a chance of an actual ease tomorrow, which is really outrageous. And then it kind of very quickly sort of recalibrated itself. And I think that people start to realize that it was just really sort of strictly an equity, situation, and bond markets, short rate markets sort of just went back to sort of being normal,
Right.
So it was more like really of an early morning thing,
Right. We're talking here, depending on when we get this out, it's January 28th. Tomorrow we have a double meetings, right?
Yeah.
The Bank of Canada in the morning, then we've got the Fed. The Fed's obviously expected to do nothing, hold steady. Their economy seems to be doing better than ours. How did that affect our bonds and core futures?
Actually, in the 30 years I've been trading, I don't think there's ever been a day that I can remember where both meetings are on the same day.
Really?
I don't know. Do you remember?
I don't. No, I don't. That's true. I
remember. I definitely can't remember that ever happening.
Yeah, I'm not.
They've had moves on the same day when there's crisis situations.
Yeah, for sure. But I don't remember a double meeting. That's for sure. It's always there were always double employments and things like that, but never.
Exactly.
Double rate announcements, which is odd, but we're I guess diverging a bit from the U.S. for sure.
Yeah, we have been for quite some time.
What's going on as of today? Is there any?
Well, it's essentially 100%. The pricing is 100% chance of a 25 basis point ease tomorrow in Canada, and a 100% chance of no move by the Fed,
right?
Which will take the difference in the two overnight rates between the Fed and Bank of Canada to 125 basis points, which is also probably quite anomalous in history if you look at it. Right. I don't know if it's ever been like that, before.
Mm-hmm.
Big spread between interest rates, which of course is hurting our dollar and whatnot, but that,
right.
There seems to be so many different things going on to justify that. It's hard to sort of wrap your head around it all,
Right. And there's no chance of 50 tomorrow? Is there a small chance?
No. Well, there's always a chance, but not in the pricing of the markets,
The markets aren't pricing. No crazy bids.
Yeah, the one futures month the front month futures, which is the nearest to expiry, that prices things very, very accurately, is pricing in a 100% chance of 25 basis points lower, and 0% chance of 50.
Okay.
So, but again, anything, especially with the Bank of Canada, anything can happen,
Right.
Yeah.
Right. And what are you seeing? What are your thoughts on your going forward? What's the market telling us today? And do you have any thoughts that are counter to that?
So the pricing in the market right now in Canada is for 25 basis points lower tomorrow, and then another 25 at either the March meeting or the April meeting, and then sort of another 25, one more 25-point move till the end of the year.
So is it slow?
So on aggregate, the market's pricing 75 basis points lower rates in 2025, and more front end loaded. So tomorrow and the next two meetings, which are March and April, the next two meetings, and then one more quarter point move from sort of April all the way out to December.
Right.
So
has that changed a bit? Because we're kind of at 50. I've seen.
Yeah. I mean, prior to our inflation numbers, which came out, was it last week or the week before last? We were pricing in essentially one 25-point move in the next two meetings, and then maybe one more.
Right.
So since then, they've sort of added on one more in the nearer term.
Right. Yeah, that's what I thought. So
yeah.
Potentially it's back to 3 cuts this year from 2 for sure, and one that was kind of lukewarm.
It's right now it's pricing 3 cuts, and 2 of those 3 are being priced in the spring. Well, one for sure tomorrow. If they don't go tomorrow, it would be a real shocker. So one very quick tomorrow, and then another one within the next month or so, and then one more sort of going out.
So are you trading this? Have you been active in the market lately? Are you?
I'm active every day, but I'm sort of on shorter term trades, so I'm not. Bank policy stuff really sort of takes effect more. In the shorter end of the yield curve, but it hasn't been an easy environment, because usually Canada and the US are moving congruently, whether they're easing or raising. So it's quite anomalous to have one bank going in one direction, the other bank not doing anything. And also, there's just so much uncertainty around our economy. Even prior to the whole discussion around the tariffs, there was a tremendous amount of uncertainty around whether we were slowing down or not, and then there's all this political uncertainty.
Mm-hmm.
Now you add on to it all this uncertainty around the tariffs, and it's very sort of hard to I think it's going to be very hard for the Bank of Canada to properly navigate how to react to the different exogenous shocks that are coming into the economy.
Right. So aside from, I guess, the spread between Canada and the U.S.,
they're big spreads.
It's a big spread. Our economy.
Yeah. So at every point of the yield curve, when you compare Canada to U.S., it's like 125 basis points of spread, right? Whether it's like the 5 years, 125, 2 years, 125, it's a lot, right? Like, if you're an investor in Canada, if you're an institution, you're going to take your money and you're going to invest it in the States. You can get, like, even myself, the excess money I have on my balance sheet, my corporate balance sheet, I'm converting into US and buying US Treasury bills, because you're picking up 125 basis points more than in Canada, right? So there's definitely a flight of capital from Canada, which of course puts pressure on the dollar, which is not great for our economy. And so, I think that at some point in time, that's going to become an issue, with our economy, for our economy, and that's without the tariffs.
That's without the tariffs. So how do you figure, Tiff McClem, like what's your how do we navigate this? How do you think we navigate this? Like that spread it, I mean, we've both been in these markets for almost 30 years now. Like that spread is unprecedented.
Yeah.
Do you think that resolves itself? Like, do we just continue along this way, especially if they're going to do another three and there's nothing really being priced in? Like maybe they're pricing in one quarter cut this year in the U.S. Maybe
they are pricing in one quarter cut by the fall, and then maybe another after. I'd have to look at my U.S. curve. Hold on, I'll tell you. They're pricing in. Yeah, they're basically pricing in one by May.
Yeah.
Which is like 3 meetings away. And that can also change.
They could change for sure.
Anything very, very fast, right?
The guy over there is a hothead, and anything can happen. But
right. But, there'll be pressure. There'll be a tremendous pressure on Powell from Trump to lower rates. Like the interest. Just a really interesting statistic. The current interest that the U.S. is paying on its national debt, which is like, I don't know what it is now, 35 trillion or something like that, 32 trillion, is the same amount that they're paying every year as the national debt was when Obama took office. So when Obama took office, whatever, in 2008, I think it was, the national debt of the U.S. was about $2 trillion. And that's what they're paying now in interest. Per year. Right. So they're running north of $7 trillion budget deficits, and two trillion of that is just interest. So there's a tremendous amount of pressure on the Fed to lower rates, but the Fed doesn't control the long end of the curve.
Right.
The 5-year, the 10-year area of the curve, and the bond vigilantes are out, and there's inflation and there's massive deficits. So you end up getting a steep yield curve, So there's, like I said,
what does that mean to the average person?
So the yield curve is, it's basically a duration curve where in the short end you can invest your money for, 1 month, 2 months, 3 months, or you can invest out to 10 years. So the yield curve is just on the x-axis is just the duration, the time duration of the various fixed income instruments, and on the y-axis is the yield. So when it's steep, its short-term rates are much, much lower than longer-term rates.
Yeah.
And most federal debt, be it in Canada or the EU or in the US, is long-dated debt. Probably the average duration is like 7 to 12 years, right? So interest rates can be low in the short end, but it doesn't necessarily help governments fund their deficits.
Right.
You really need long rates to be lower, right? So I guess for the mortgage market, you look at more like 5-year at the
5-year, 4-year swaps, 5-year, 5-year rates kind of thing. A lot of you price the fixed off the 4-year swaps, and and then the spreads on the variables are based on what's happening in money markets and spreads and things like that. But certainly there's I think when we spoke, we might have, last time we were around, and I have to remember this, we might have been around the lows of fixed rates, like, because they haven't, obviously they haven't dropped like the variable rate has, and fixed rates have probably bumped up a little bit recently, just because of the long end of the bonds. So a lot of interesting things here. So we've got an unprecedented spread in Canada, U.S. interest rates.
Yeah.
We have a president that wants to realign trade barriers or trade deals.
Yeah.
We have a vacuum of federal leadership in Canada. We have a sticky inflation. I guess the last one was a little bit sticky.
No, the last one was the first one that showed quite a bit of disinflation month over month. But there
was better inflation month over month. The jobs were a little stronger, right?
Yeah. I mean, Canada's running, I think, I can't remember the last number, but I think we're running around 2.5, somewhere between 2% and 2.5% year over year inflation, which is a lot better than where we were in 2022. I think there's a lot of people that would argue, myself included, that Macklin's been a little bit aggressive in lowering rates, but I think given our housing market, there's been a lot of pressure on him to ease the burden, the mortgage burden on regular Canadians.
Yeah, they've done some work for sure in easing inflation, and I guess finally the economy. I don't know if we're in recession. You said we're 2.5% or 2%. Growth.
No, 2.5% inflation. Our
inflation. Growth is lower, is it not?
I think our growth is lower. I forget what the GDP numbers were.
The one thing I know for sure, because I pay attention a little bit more. I'm in Ontario. I pay attention a little bit more. On the last unemployment number, Ontario I think came out at 7.6, and Toronto's unemployment rate is 9%.
Wow.
So I know bubbling under the surface is an economy, I think, led by Ontario in Canada that is already in recession, and it's coming into a tidal wave of renewals. It's an interesting time.
Yeah, I mean, especially if the tariffs could significantly contribute to higher unemployment rates. I don't know. The tariffs are hard to. People
hard to model, right?
Yeah, the media kind of dumps them down as just being like inflationary this that, but they're very segment oriented. They're targeted, right? Obviously, if they're sweeping, we export 2/3 of our GDP, so any export is going to hurt our economy for sure, right? But then if we have retaliatory exports against the U.S., it's very sectoral. It's very hard to sort of get your head around, right? It slows down your economy. It's also inflationary. So will that make the Bank of Canada not ease on interest rates because inflation goes up, or will they ease rates because the economy is really grinding to a halt because of these tariffs? It's very difficult to understand, right? And also the way that Trump sort of exerts his policy is that it's like a light switch, right? Like he can hit you with Columbia. He has a good night's sleep and feels better and takes them off.
Just go have a nightcap. Oh, I'm taking the tariffs off.
Yeah, I mean, seriously, he sort of did with Columbia this weekend. With the planes that they turned around.
Yeah.
They had tariffs, slapped on them for, an hour or two,
right?
And then taken off, So, but I think at the end of the day, I think that Macklin and the Bank of Canada chose to ease aggressively to help homeowners and people pay their mortgages, and I think time will tell whether he went too fast,
Right.
And you create, your interest rates are probably the biggest, one of the biggest things that determine the value of your currency relative to other currencies. So when your interest rate differentials become really spread out, especially with your largest trading partner, a low dollar is great for trade. Tariffs or not. So it's very difficult to sort of understand how it's all going to play out.
Right, it's tough when you have one part of the equation is just so volatile, for sure.
Yeah, and it doesn't help that we have a leadership vacuum. Parliament's not even sitting down in probably like the greatest, sort of trade crisis we've faced in a while, where our parliament even, sitting.
Yeah.
So I think that the Bank of Canada is going to have a big challenge, going forward, And I would always err on the side of, I think that they always want lower rates.
That's for sure. In our 30 years of watching
Yeah.
markets, the trading or whatever, there's never been a time where they didn't want things lower.
Yeah, lower rates. Everyone likes lower rates. It's not, it's again dangerous to reignite inflation that way, but
Yeah. So I'm going to play a hypothetical. I'm going to put the Bank of Canada. I know you spoke to them recently, we've had these conversations, but I'm going to put the Bank of Canada cap on Kevin Abarbanel. You're going into the meeting on January 29th. Obviously, you're probably not going to push them against the market now that it's priced in 100 quarter point easing. But going forward, how would you navigate this? How would you think you would navigate this?
I mean, I'm not the best person to ask because I firmly believe that we have a housing crisis in Canada from a value standpoint. When you have a whole, new generation of kids coming out of college and have no shot at home ownership, there's a problem there. And I think that problem was created by our bank, many, many years ago with very low interest rate policy. And I think that our housing market doesn't necessarily need to, have a significant correction in price, but I think that it's best when interest rates are at, sort of normal levels, if you will. I think it's healthy for the market. So I wouldn't be lowering rates. In the US, they've gotten used to 7% mortgage rates.
Yeah.
Like they're still paying 7% mortgage rates, and the housing market has held up quite well. And I think that when you have rates,
they have 30-year mortgages too.
Yeah, there's different for sure, and they're deducting their interest, and there's different,
right,
nuances to that. But I just think that part of the problem we have in Canada is that housing just becomes more and more expensive the more and more interest rates get lower, right? And so I would rather see the bank not be so aggressive in lowering rates, and I'd rather see regulation come out that helps people with their mortgages and just sort of equalizes the playing field a bit more,
Right.
Because our housing issues are not going to go away, and they're only exacerbated they only get worse when rates are lower,
Right.
Right. Yeah. And I'm speaking as a homeowner. Of course I don't want my house to dramatically drop in value. That's not what I'm saying. I'm just saying that, I think that what are mortgage rates now?
Low 4%.
Yeah, so I think 4%, paying 4% on your mortgage is a very, very good deal.
Yeah.
And that your whatever income you have, you should only buy a house that you can afford to pay 4% interest rate on. Right. That seems very fair to me, right? If you're borrowing money and you're only paying the bank 2% mortgage rate, housing prices are just going to go through the roof again, right? Because
right.
You can your disposable income, what you can allocate to your mortgage just becomes so elevated, relative to other countries and what they're paying for real estate, if that makes any sense,
Right. So going back to crazy man across the border.
Yeah.
Do you think he's legit when he says 51st state or whatever? No, just joking around. He's just playing his.
Well, I think he's. I mean, whether he believes it or not, I don't think that. I just don't think that there's. I don't think that there's anyone that would, I don't even know. I don't even have words to try to say what,
Like, what could we do about it? Like, legitimately.
Yeah.
Justin would say no.
I mean, it's definitely. I'm a bond trader, so I'm not a military or political science expert, but I would suspect that there would be quite a few countries in the world, namely Britain and others, that would have something to say about U.S. trying to invade Canada.
Right.
So.
Right. So you, as a Bank of Canada governor, Kevin Abarbanel, probably tomorrow, 29th, you would cut because it's already in the market, and after that, you just let it sit for a bit and
Yeah, I mean, I would hate to shock the market, but the market, I think Trump's more dangerous from a policy perspective, trade policy perspective, uh,
Yeah,
for Canada, because we're so dependent on the U.S., and they depend on us for a lot too. Like we export a tremendous amount of hydroelectricity to them and whatnot, but we're not going to win in a trade war with the U.S.
no,
No one's going to win in that, and so I think that it's imperative that whoever our next leader is, um, that they sort of make peace with Trump.
yeah.
I don't even know where this whole tariff stuff is coming from him. His dislike of Trudeau, or I don't know. In his first term, was there any talk of tariffs with Canada? I can't remember. I don't think so.
I don't know. I don't think so, but I think his mandate is the border. His mandate is crime. Seems to think that a ton of it, I guess, comes from through our border, the fentanyl and stuff like that. So,
Yeah,
it's a new mandate, stronger one, I think, with the with the border stuff, and I do think Trudeau kind of, they all took him for granted, never thinking he was going to win again, and throwing shade at him for the last year or so. And
yeah,
even his feminist Trudeau said they should have elected a female.
yeah, yeah,
And then he threw Krista Freeland under the bus like a week
yeah.
later.
Right,
But,
right. I
but
do think that the dollar could be very problematic.
yeah, it
Um,
could. The tariff thing, it could make our dollar.
Yeah, not only the tariff thing, the interest rate differential, and one of the things that Trudeau was really, amongst many things that he was bad at, was productivity in Canada has just gone
Terrible.
terrible, right? So
Terrible.
we're not producing, we're not productive like the way we used to be.
Majority of the jobs have been public sector jobs too.
Public sector job value creation was, he doubled or not doubled, he increased the federal workforce, I think, by 50% in his 9 years.
Yeah.
So, we all know that that's, not always the most productive space,
Yeah.
And spending has been out of control. So low interest rates, big difference in interest rates in Canada and US, unproductive country, or relatively unproductive country. I don't know. The dollar might have trouble unless there's a commodities boom, right?
Maybe could happen.
Which could very well happen, But I think that the new, whether it's the Liberals who get back in power or the Conservatives, that they need to sort of right the ship a little bit on Canada and get back to, making things here and putting money into increasing our productivity, our economy, and focus a little bit less on, virtues, whatever you want to call Trudeau's policies,
Right. And before we go, I might as well have your thoughts on Carney. We both were trading when Carney was Bank of Canada governor. We were both pretty serious. So, what are your thoughts on him? Do you think he is good for to run us through these issues, or do you think he's like I do? I think he's also a little bit of a virtue signaler. Easy guy and climate fanatic.
Yeah, it's interesting. I remember him as being a good governor of the Bank of Canada.
I remember him as not having to do much during his whole time.
Yeah, I mean, he was governor during the low interest rate environments, but there were a few times, and I can't remember exactly, but there were a few times when he went against what sort of the aggregate market wanted him to do, and he was willing to sort of stand in there and do things differently. I thought he was a good governor of the Bank of Canada. Same thing, Bank of England. He didn't have too much to do. It was low interest rate environment. And then when he went to the Bank of England, I sort of lost track of him and, didn't follow too much like his political leanings and stuff like that. And only now am I hearing from people that he's, sort of this wild, climate guy. really, progressive sort of climate, policy maker. But I don't know much about him as a political leader, But if he was put into the role of the Bank of Canada, which is not, that's not going to happen. He's going to run as the Liberal leader, but that I would be happy with, because I do think he was a good governor of the Bank of Canada, and I believe he came like Powell from the street. Like, didn't he come from Goldman or JP Morgan or something like that?
He's a Goldman.
Yeah. So,
he was from that batch of people that kind of infiltrated all the central banks at one point or another, like Draghi and him and stuff at that time. So I guess we've got a tough when all these liberal cabinet ministers are backing him to say he's going to be different, but I guess we got to give him the benefit of the doubt until we see what his policies are, right?
I think it's important. I mean, it sounds ridiculous to say, but whether you're Canada or another country, it's almost like you have to have a leader that Trump likes. Like, it's ridiculous. It's like you got to, he's the bully in the schoolyard, and whether you like him or not, you got to pray that he likes your leader, because otherwise he's just so vindictive and so, crazy in what he's willing to do, even like when you look at the tariffs of Canada, like, does Trump really think that our border is a problem? I mean, he might not like, he might just be using the border as an excuse, but what's the beef with Canada? Like, we've been friendly trade partners and countrymen, and Americans and Canadians have gotten along forever. Where is this all coming from?
I don't know. We'll see.
It's a serious thing too, right? It could if he really does it and sticks to it. Canada's going to have, for whatever industries that he slaps those tariffs on, they're going to have to start shipping stuff overseas.
It could be a scary few months if we go back to what you just said, like, because he's definitely not a fan of Trudeau.
Yeah,
I don't think he's a fan of anybody in that party. They've kind of trashed him a bit for the last couple of years.
Yeah.
But until we actually get, new leadership that can stand up to him. And that might
I initially thought when he was talking about the tariffs that it was just really a move to get Trudeau out. But that, now that Trudeau's resigned, he's still doing it, and it looks like, February 1st is Saturday morning.
Yeah.
It's Saturday morning, right?
And I think I just saw this before this is the 28th. I just saw his press secretary say, as of today, we're not backing down from February 1st on Canada, Mexico. So we'll see, we'll see if he pushes it back like he did, last week.
It's interesting, the oil thing, because oil is a major, major part of our GDP. And I've read that we export like 2 million barrels a day to the U.S.
Yeah, at cheaper prices than world prices, right?
Oh, do we?
Yeah.
But they also produce like 10 million barrels a day themselves. And there seems to be not a lot of, I can't really find a good place to find what their domestic consumption is themselves, trying to get at an answer of like, how dependent are they on those 2 million barrels that come in a day?
Well, I mean, maybe somebody, listens to this and corrects us, but they can correct me if I'm wrong. I think we're shipping oil there $10 a barrel lower than the world market. They're refining it and sending it back to us, and we're buying it from them at higher prices. That's the whole.
They're just refining it for us because we don't have the refining capacity.
We don't have the refining capacity. I mean, they're buying our oil cheaper, which is good for them, but they're also refining it and we're buying it back. So I think all these calls for pipelines and refineries and LNG plants, in a time when we have a scary partner, makes sense. I mean, it'll take us forever to build all those do all those infrastructure things. But that's essentially what's going on in oil from my readings.
Huh. Interesting.
Yeah. So
yeah, I mean, the other thing too is that all these things, they take so long to play out. If you're the Bank of Canada, like you don't want to be overly reactive. You need to see sort of what things look like. You know what I mean?
Well, I don't know. You saw the Globe headline this morning about they're preparing a pandemic type relief in case there's tariffs, and they want the other two parties to hold off calling an election if the tariffs hit.
Who is?
It's an article. I think it's by Coin, the Globe writer. There was an article this morning about
Andrew Coyne.
I believe it's him.
That the Liberals are planning.
Liberals they're planning a pandemic relief bazooka just in case, just like COVID. But they want the other two parties to sign off by not.
Yeah, they're going to want to try to buy another election.
Yeah, or buy some time, right? So maybe it's all political. They get the NDP off their back, and they make Pierre say, "No, we're not going to support Canadians with pandemic, with tariff relief." I guess we'll see. I mean, it's an interesting time.
Yeah. I was talking to James today, who's one of our friends who also trades in the interest rate markets, and I was saying, in these types of environments, nothing would shock me. It wouldn't shock me if the bank goes 50. Like it would be shocking if they go 50 tomorrow because we haven't yet known the tariffs. But if the U.S. starts to impose tariffs, and if there's a trade war that really does affect Canada, all bets are off with what the bank might do, because that's been the response of the modern monetary theorists the last 30 years has been, when there's trouble, just lower interest rates, as if it's some kind of tonic for all economic ill. And it's so false as a narrative. You just create inflation and asset bubbles, and you need look and no further than the money they spent during the pandemic and what kind of inflation that caused. And disruption that caused, by just improper management of fiscal spending and interest rates combined, lowering interest rates. So all
right, well, it's great catching up with you.
You too, buddy.
Tomorrow's January 29th. I don't know that this will get out. We'll see what happens. February 1st, tariffs potentially hitting. We'll catch up with you next month, and maybe we'll be in the full-blown panic mode, or maybe hopefully not. Maybe Trump will have slept on the good side of the bed and had
shot a good round of golf and felt better about himself.
He shot 74. He's not gonna put tariffs on Canada. So we'll see what happens. But interesting times. Appreciate your time, and let's catch up next month. And
great talking to you. And
see where we can go. All right, thanks, buddy.
Okay.
Go Leafs, go. We'll talk to you soon, buddy.